Ladies and gentlemen, good day and welcome to Mech Projects Ltd Q4FY26 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Krishna Doshi from Ashika Institutional Equities. Thank you, and over to you, Ms. Doshi.
Thank you. Good morning and very warm welcome to everyone. On behalf of Ashika Institutional Equities, I welcome you all to Mech Projects Ltd Q4FY26 earnings conference call. Today we have with us the management represented by Mr. S.K. Ramaiah, Director Business Development, Mr. N. Nani Arvind, Chief Financial Officer. We thank Mech Projects for giving us the opportunity to host the call, and we will now like to hand over the floor to the management for their opening remarks, post which we will open the floor for Q&A. Thanks, and over to you, sir.
Thank you, Ash. Good morning, everyone. I am Arvind, CEO of the company. I would like to extend a warm welcome to all of you joining us today for our Q4 and financial year 26 earnings call. Thank you for taking the time to participate in this discussion. As we conclude the fourth quarter of financial year 26, I am pleased to share that the company has continued its growth trajectory, delivering improved performance across all our core business verticals. Our results reflect the strength of our diversified business model, disciplined execution capabilities, and sustained focus on operational excellence. For Q4 FY26, the company recorded total revenue of 2,121 crore, reflecting a growth of 13% over Q4 FY25. The growth was driven by sustained execution across our core verticals and ramp up of operations, newly secured EPC order and MDO projects, partially offset by delays in certification of bills under the water division. EBITDA for the quarter was 237 crore, registering a growth of 2% year-on-year with EBITDA margin at 11.17% margin. Margins are comparatively lower than the Q4 FY25, primarily due to increase in the operating cost and lower other income during the quarter. Profit after tax for the quarter was 153 crore, reflecting an 18% increase over Q4 FY25. PAT margins improved to 7.27% as against 7% in quarter FY25. For the full year ended March 26, the company achieved a total revenue of 6,107 crore, representing a growth of 16% year-on-year. The strong annual performance was driven by ramp-up across our key verticals, particularly industrial power construction, civil infrastructure projects, O&M services, and increasing contribution from EPC and MDO businesses. EBITDA for financial year 26 was 750 crore, up 16% year-on-year, while EBITDA margins remained stable at 12.3%. Profit after tax for FY26 was 412 crore, reflecting a growth of 18% over financial year 25. So revenue mix, now coming to the revenue mix for Q4 FY26, the geographical revenue mix comprised 94% domestic and 6% international revenue. Sector-wise, the power segment contributed 57% of revenue, while non-power segment contributed remaining 43%. For financial year 26, the geographical mix was 95% domestic and 5% international. The power sector contributed 64% of revenues, while non-power sector accounted for 36%, reflected a continued diversification of our business portfolio. So from order inflow perspective, the company secured orders worth of approximately 7,210 crore during FY26, achieving around 72% of the annual target. The shortfall was primarily attributable to the cancellation of battery energy storage system order worth of 1,563 crore by West Bengal State Electricity Department. During the year, we secured several large and strategic orders across EPC, O&M, civil and ETC business. The key highlight was the award of a large BOP EPC package for the 800 megawatt Singareni thermal project from BHEL. This project marks an important milestone in expanding our capabilities from the execution packages to integrated EPC delivery in BOP systems. The company also entered a new business vertical through Mumbai Monorail O&M contract, marking our presence in the metro rail operations and maintenance space. Looking ahead to FY27, the company is targeting order inflow of around 12,000 crore with a strategic focus on expanding our BOP EPC portfolio and securing new O&M contracts. The total order backlog, including MDO contracts, stands at approximately 55,151 crore. Excluding MDO order, the executable order book stands at around 15,899 crore. This provides a strong multi-year revenue visibility across power, civil, EPC and O&M business. We continue to see a strong order pipeline across thermal power, balance of plant systems, civil infrastructure, railways and energy transition related projects. So the financial parameters, the company's operating cash flow improved significantly during FY26, increasing from 74 lakhs in FY25 to 430 crore in FY26, primarily driven by the improved realization of receivables during the year. This is expected to further strengthen our operating cash flow and reduce the dependence on working capital borrowings going forward. Gross and net debt levels remains well controlled despite delays in certification of water division bills. As on 31st March 2026, gross debt was 622 crore, while net debt was 163 crore. The debt equity ratio as on the same date remained comfortable at 0.32 times. So in summary, we are pleased with the progress achieved during Q4 and financial year 26. Our diversified order book, strong execution capabilities and strategic focus on high-value projects continue to position the company for sustained long-term growth. There is a clear visibility of growth till financial year 30. Our focus remains on increasing the share of high-margin recurring business to ensure stable growth in both top line and profitability. At the same time, the global macroeconomic environment continues to remain volatile, with potential disruptions arising from supply shortages, inflationary pressures, interest rate movements, and other external shocks. So accordingly, we are strengthening our operational and financial preparedness to remain resilient and agile to navigating such uncertainties. With a strong order pipeline and execution momentum across businesses, we remain confident of delivering on our growth objectives and creating a long-term value for all stakeholders. With this, I now request Mr. Damigar to share key business developments and the outlook for the coming periods.
Thanks, Arvind, for all the important numbers and the whole story. Thanks for your participation. I think we should still be very bullish and positive on the total outlook for the company. Looking at the growth which is happening, of course, there can be a lot of new initiatives like what we had taken in the BESS, and then there was an issue with the West Bengal Electricity Board, and then it had to be cancelled. Otherwise, our numbers would have been much better in the order backlog. But overall, if you look at the total order backlog, has gone up by 10.5% for the current year, from 14,887 crores last year to 15,898 crores. And the three growth areas had been to be in the power sector, and that is mainly because of the bullish investments which is happening in a substantial way in all the segments of the power sector, particularly in the new thermal business, both with the public sector utilities and also the private sector like Adani. And recently JSW also joined, and then other players also expected to kick in. Therefore, that is the basis on which we have continued to focus on that. And the mechanical business had a slight dip. Of course, if you take the EPC portion of the installation, it can still okay. And then the civil side also, but the major growth came out in the O&M sector, about 8%. And this one, solar is a new entity. We have put a 16 megawatt plant in Bihar. For these are the new entities, but what is the key aspect is the foray we have made into the engineering project construction, that in the balance of plant, that is synergizing our expertise in the service side. That means we got a strong background in doing the civil works, structural works, mechanical works, and also commissioning support works. And that has helped us to take up the 40% of the value addition in-house working, with 60% to be managed by engineering and procurement from the key parties. But overall, the company is quite confident of executing. It's an important job, and this allows us also to enter into similar type of jobs in future with a better value addition in similar projects which are expected based on the present tendering practice by BHEL. And then the domestic scene is to be continues to be the positive, more of the orders coming in the domestic sector. And then power sector, the backlog of the order is about 70% and non-power is about 30%. That is on the overall number. And the key aspects of the business is continues to be, in the case of power sector, if you look at it, I think we continue to remain positive on that. Actually, government's initial plan of 80,000 megawatts can go up to nearly 100 gigawatts in the coal-based power plants. We have seen recently certain trends about the increased solar power, which has gone up 150 gigawatts, and it will slowly go up to more than 300 gigawatts. That can bring in a lot of grid imbalance, and that's why the necessity of managing the grid needs more thermal power in the night operation and the day-night operation practices. And now the new players are also coming. JSW is coming with new plants coming up in Salboni and then Orissa. Adani has taken a substantial initiatives, and then perhaps their overall plan is to triple their capacity from 17,000 megawatts to more than 45 to 50,000 megawatts. And the overall this one, and they have done substantial ordering about 16,000 megawatts as on today. And NTPC has done the other major ordering about under 12,500 megawatts. Apart from the other players like Damodar Valley Corporation, Highway Lignite, then Singareni, and then Gujarat State Electric Company Limited, and then Chhattisgarh, and then MP Genco also. Therefore, the expectation is that the present opportunities what has been ordered, that comes to substantially about nearly 2.8 lakh crores in terms of the direct ordering done by BHEL, L&T, etc. On the major packages, and that will translate into a reasonable opportunity for us about 60,000 crores in various segments like installation business, civil business, structural works, and then balance of plants on packages and all. And that is what we are banking upon. That is how we have seen recently the major orders also going from similarly from Adani side. We are actually working in about 4 major projects in Adani, in Mahan Phase 2 and Phase 3, Mirzapur Phase 1 and Raipur. Totally 6,400 megawatts, and ongoing projects valued about 3,166 crores. And then BHEL is there, and then apart from the one nuclear project, we have taken up civil works for 563 crores, 2 into 7 megawatt. Rest of the thermal plants about 7,000 megawatts, nearly around the 2,200 crores. And then if we add the recent addition of the Singareni, about 2,550 crores, the total BHEL various packages and orders will be about 4,700 crores. Therefore, these are the 2 major players in which we are continuing to focus it. And only thing, how much is the additional order will flow from the balance ordering to be done, and then the packaging to be done by Adani, then presently JSW, Salboni, and then they are putting up a plant in Assam also 4 into 800 megawatt. That we are discussing with them. And O&M is going to be continues to be an interesting opportunity for us, and that is margin driven. And then new opportunities are being followed up in Balco and also in Buttibari with Reliance Infra and other projects. And then recently we have taken a job in Hindustan Zinc Limited also, in continuation with the earlier order for the Hindustan Zinc captive power plants, 91 megawatts. Therefore, about 4,100 megawatts of ordering has been taken up in the previous year. And then, looking at the commissioning program and the aspects which will happen in terms of the commission in the coming years, if we take the average 8 to 10,000 megawatts of ordering, perhaps, the two areas, our business, that is installation business, then the civil works, and the third area which is important is the O&M, long-term O&M. That should bring us a lot of results in terms of balance ordering and other things. Apart from that, company is very much focused. Recently, major breakthrough had been in entering into O&M business in the metro sector. 279 crores, so we have taken up in this one light railway in Bombay. That is 15 stations work of doing that is a major technological breakthrough for us in terms of the operation maintenance practices. And today we have seen about 950 kilometers of railways, metro routes are there, and is going to develop it to 2,000 kilometers. And that should help in, this initiative should help in terms of the outsourcing of the O&M and operation of the metro works. And that should be a new opportunity which we should follow up in the future also, apart from the traditional power sector and to some of the areas in the non-power sector also. Then coming to the major opportunities, what we are planning is in the current year, there is a reasonable opportunity basket available. We have identified about 70,000 crores of opportunities in terms of what is visible in the various sectors, in the power sector, non-power sector, infra works, then O&M services, metro maintenance, and then EPC works, etc. And that we are keeping a track of it. Of course, the order booking plan we have, based on the opportunity available, we hope to get about 12,000 crores is the 12,000 crores is the goal. This one we have kept it for the current year, and we continue to follow all these opportunities, and clear tracking has been done about the 70,000 crores of opportunities in all the sectors. And another important development is the NMDC is coming with a lot of investments. Perhaps their plan is to set up their existing capacity of 60 million tons to nearly 110 million tons by 50 million tons, and that needs an investment of about 70,000 crores. And we had recently done one bidding for the BOT projects for a 5 million ton capacity mine site handling facilities. And that has to be seen the outcome of it, what they are going through and all, based on the price levels and other things. And then new EPC tenders have come. We are tying up with Tyson Group, the Pune. They are one of the strongest technology partners in terms of the iron ore material handling and then process management. This one, and we will be their construction partner, and we will take the lead. And about couple of projects are there in NMDC worth about 8 to 10,000 crores. The other aspects is that the non-power roads investment continues to be there, railways is to be there, and then non-power NMDC is sold, and then the new visibility perhaps is a steel plant. Recently we had done some bidding work in the ISO Burnpur, but our prices were a little bit higher than the other players, about 3,000 crores of opportunities. But there is a new investment coming up in Bokaro steel plant and then Concall steel plant. Apart from that, ArcelorMittal is planning to put up a 10 million ton capacity plant in near Anakapalli in Andhra Pradesh. And then JSW is planning a new plant up in Paradip, 10 million tons. Of course, after some time they are planning to invest 25 million ton capacity in Gadchiroli near Nagpur. Therefore, we have got some exposure and undertaking the steel plant works also. Earlier we have done in Dolvi, Ballari, and then JSW Angul, and we want to see how to leverage our existing experience, what we have achieved there, and also the similar works what we have done in the civil infrastructure and the installation works, whether we can take up in the case of steel plants also. Therefore, overall, the investments will continue to be there in terms of the railways, highways, metro expansion, power sector I told you 100 gigawatts nearly, and other sectors also. And then O&M some opportunities we are following it up in the Middle East also. And now a lot of about 1,500 headcount is deployed in the Middle East to do about nearly 300-350 crores of jobs. And we have taken a major O&M job for the captive power plant in Nigeria also. Now there are some inquiries coming from Senegal and then Liberia, then Nigeria, and also some of the African countries. Therefore, we have to see how to expand these opportunities in all these sectors. Therefore, from that perspective, the overall opportunity available, we feel reasonably that the 12,000 crores of this one, what we have kept as our this one current year target to be possible, and we will try to do that as much as possible on that. Thank you.
Shall we open the line for questions, speakers?
Okay.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Mohit Kumar with ICICI Securities. Please go ahead.
Yeah, good morning, and thanks for the opportunity. My first question is on this, on the order inflow. I think last year we guided for 10,000 crore order inflow, and we think there's a substantial miss, right? Can you please explain is it that you saw a lot of order which got which the finalization got postponed in Q4? Is that the reason of the miss, and to expect those orders to get finalized, tenders to get finalized in fiscal year 27? So fiscal year 27 should be a better year in terms of order inflow, and also a color on the order inflow opportunity for the thermal BOP for fiscal 27.
Yeah. I think as far as our interest was there, Adani, we had been reasonably successful in getting many orders of their Mirzapur, Mahan, and then Raipur. And of course, the new investments, whatever they are, we are bidding with them also. Now, even though BHL has got a lot of orders on the existing, but there's some packaging philosophy, they have changed it, and that we are watching it. Of course, on the BOP side, we are going to bid for 2-3 projects. That's about 50,000 crores. And our aim is to get one more BOP in the current year. That a strong team has been established with some experienced people from BHL also. And with the present experience, what we are gaining in Singareni, and then our in-house expertise in the execution, that should help us to be competitive. And we are getting qualified also in these BOP projects. But on the main installation side, we are quite positive on Adani and then JSW. And then BHL is a question of how much is the competitive levels we can work on the pricing because of the packaging philosophy they may follow. Because they also want to see how much competitive they can get the pricing for the market to fit their budgets and all. But we are having a long association with BHL and the value of association and also our execution capability. Therefore, that should still come into our help when we focus on that. Therefore, I will again come back to the opportunity levels available, about 70,000 crores, which have been identified opportunities. And that should be the basis on which we can look at it. And O&M, we are discussing a major job in Balco, around 1,500 crores. Another 700 crores of opportunity, Buttibori 2 into 300 megawatts, that also we are discussing on the O&M side. And then with the new plants coming up in the O&M side, that is operation commissioning, completion. Perhaps, these things should continue to be, progress should be there on the O&M side also. And then the new initiative we have taken in terms of the mine site facilities, because there is a lot of focus on mine side investments, and then as a policy by the government, both in the iron ore side and the coal side. They want to avoid this transportation by road, and they want to mechanize the entire system, right from the mine side to the delivery side. And we have developed some expertise based on the work we have recently getting completed in Kurmitar. That was in association with Adani job. That was a small job of 200 crores on the association with Tyson Group. And that expertise should help us to bid for all these projects. And the qualification, we are fully qualified for a couple of tenders there in NMDC. And that is an area we have to see how we can be successful as a new initiative. Therefore, from that point of view, I can only say that let us expect that the opportunities what we are tracking should fructify.
Understood, sir. My second question is on the mine, on the mine side. What kind of volumes one can expect in both the mines separately for FY27 or FY28, given that both the mines are now operational?
Yeah, the KBP mine just started November, started production and ramping up happened, and last till March we did around 248 crore revenue. And in sale project we did around 106 crore revenue during the FY26. This will scale up. The KBP mine, their offtake is now beyond the contract capacity they are lifting. So 350 crore we are projecting for the FY27 and 500 crore for FY28 from KBP. And Tasra, our washery project is under process, undergoing, and maybe by December we'll complete our entire washery. Maybe Q4, mid of Q4, we'll start our production and ramping up the production from the Tasra mine. So we may expect 150 crore from FY27, and it will ramp up to 750 crore by FY28. So maybe 6% to 7% growth will be there for next year, and from 7% will jump to 13% growth. Overall revenue in the revenue component, it will jump 16% jump, 6% jump will be there on the revenue.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. Next question comes from the line of Tushar Khandelwal with Nexus Security. Please go ahead.
Good morning, sir. So my question is regarding, I understand we missed order inflow guidances and revenue guidances, but we are able to meet the revised revenue guidances this year. So I see a lot of challenges in the MDMO segment of the business. So management is seeming quite confident for achieving the 2027 guidance at 28. So is there any underlying change in micro level or business level or initiatives from the company which are from which we are seeming this confident on achieving the 27 and 28 numbers?
So the FY26, basically we projected around 6,500 crore, and there is a shortfall mainly on account of the water division. There is a delay in certification of bills. Otherwise, we almost against 700 crore shortfall. Our shortfall was only 400 crore, 450 crore shortfall. So more or less with that, we achieved more than what projected in other divisions. And for the FY27, we are confident of achieving. We are projecting around 21% growth for the current 27 estimate. We are projecting 21% growth. We are confident of achieving that, and even the MDO ramp up is happening. And we are more focused on the high margin O&M business. This year we are expecting more O&M orders, high value orders in O&M division also. And EPC is also, we just started last year, and we are expecting more revenue from the EPC business. So we are confident of achieving the projected number of 21% growth, sir.
Okay, thank you. And for second question, are we facing any labor side shortages or labor problems?
No, that is always part of the labor shortage is always there, and we are always recruiting the people and training on our side, and we are managing. We are the largest service provider in terms of erection business and O&M side. We are so major opportunities are there with us. So people are attrition is there, but we are maintaining with the new people, and we are managing requirements.
Thank you, sir. That answers my question.
Thank you. Next question comes from the line of Vignesh Iyer with Sequent Investments. Please go ahead.
Hello.
Hello, sir.
Mr. Iyer, please go ahead.
Okay. So my question is more on the raw material inflation that the industry is witnessing as a whole due to the West Asia ongoing war. And I wanted to understand, from our current order book, what percentage of the order book is insulated partially or fully with any escalation clause in place? Or and for the part that is not insulated, what is our strategy going forward?
So our order book, international order book, is we are only doing O&M services, which is consist of 1.2%, 1.5% overall order. There is no much impact on the war on our O&M business. And in fact, if you compare my FY25 to FY26, my revenue has grown up from 292, it has increased to 327 during the current year. And as such, there is no impact, and in fact, we may get more opportunity in terms of construction side. There are a lot of plants are under dismantle, and we may get good opportunities in O&M, in erection business.
Moreover, I think most of our major works we are doing in Nigeria, O&M, nearly 100 crores job. That is a long-term contract. And then some inquiries are also coming in the West Africa. And let us say, because our installation jobs, which we had a substantial presence, that has practically come down. We don't are doing it. We are only doing the need-based O&M jobs, manpower supply, and that is okay with the better margins and all. And I hope war also will not last.
And we are doing majorly O&M businesses. We are not into the erection, so there is no impact of international any raw material prices. Impact is not there. Domestically, there is increase in the pricing, and at the same time, we are covered with the escalation of every contract. We are carrying that escalation value, so we may get the reimbursement from the clients.
So my question more was on the civil work side of it, right? On the power projects, if any, on the domestic side, because there are other EPC players who are facing it as of now. So the question was more on that line.
Yeah, EPC, there will impact. So steel and cement prices have increased. Diesel price has increased. So to the extent PVC is covered through our contract arrangement. So we'll get the reimbursement from the clients to the extent of that increase of PVC.
So how should we, sir, look at our margins then for the upcoming year on the standalone side of the business? If you could, for the entire year, I mean, if you could.
Yeah, standalone level, there's a marginal pressure because of the water division certification delays are there. Whereas this year we are expecting the central government will release their funds, so we are expecting because of the additional overhead, the margins constraint is there in the water division. So we are hoping that this problem, this will be the funds release will rectify this problem, and the certification will generate more margins. And for FY27, overall margins, because of our O&M revenue mix is increasing and EPC division revenue is increasing, so the margin profile will improve, and MDO business is also increasing in the total top line and bottom line. We are hoping that this time we will touch a bit of 12.5%, including other income. We may touch around 12.5%. There may be a jump of 0.25 to 0.3% jump in the EBITDA.
Okay. And how should we, sir, if you could share it, how should we look at the margins on the MDO project?
Sorry?
How should we look at the margins for the two MDO contracts that we have got?
MDO just started the production, sir. So only when we reach the peak rate capacity, we will touch the blended together around 20% average EBITDA. At this moment, 15 to 16% we can take the average EBITDA margin we are generating on this MDO.
Okay, sir. Okay, sir. That's all from my side. Thank you.
Thank you. Next question comes from the line of Deepak Poddar with Sapphire Capital. Please go ahead.
Hello.
Hi.
Yeah. Hello, sir. Am I audible?
Yes.
Okay. Thank you very much, sir, for this opportunity. So just wanted to understand the MDO. We are targeting from MDO FY27 500 crores kind of a revenue, and FY28 1250. Is that right understanding?
Yes.
Okay. And how should one look at the margin trajectory in MDO? I mean FY27 and FY28?
It will reach every year 1% jump in the MDO revenue, because when we reach the peak rate capacity by 29-30, we'll reach we'll reach the PRC by 29 in one project and 2030 in another project. So by the time we'll touch 20%, so 15 to 20% every year 1% jump will be there.
15 to 20? Sir, I did not follow.
Every year 1% jump will be there, depends on the volume.
Okay, every year. And how much was the margins in FY26?
It's at 15%. Roughly, we achieved a higher side because KBP we received March month itself we did around 117 crore revenue, which is a bigger number. Every month we should do 40, but this month, March month, we ramped up the production. The initial OB removal will be very less. So when you go deep into the pit, you will get more OB removal. Your cost also will increase for the production. So average we can take 15 to 16%.
Okay, and this 15% EBITDA margin, 15 to 16% was at 354 crores kind of a revenue, right? We did in FY.
Yeah, going forward, final also you can take 16%.
In FY27 also 16% is more.
So year on year, because of ramping up production happens, and at the same time you get a production overhead adjustment. So 1% jump you can take from 15 to 16, 16 to 17. And by peak rate, by 2030, we can touch 20-21%.
Okay. Understood. And FY27, any order inflow outlook we have? What sort of order inflow we might be targeting?
We are targeting 12,000 crores. This year we are majorly targeting BOP, one or two projects of BOP EPC, and major MDO projects, O&M projects we are targeting.
Okay. And what's our CapEx plan for this year, FY27?
CapEx we are doing washery as of now, and we will complete the washery activity. So around 400 crore capacity will be added by FY27. And in SPV, another 400 crore of Tasra washery, Tasra coal handling plant and railway siding will be added in the SPV group. So at Power Mech level, only 400 will be the addition to the CapEx. Without any debt, we are adding that 400 crore CapEx.
Okay, understood. And what's our export mix right now?
What else, sorry?
Export mix.
This is 4% of the revenue.
Okay. And because of this global macro scenario, I mean, are we facing any issue in terms of business?
We are only doing O&M service majorly, sir. There is no disruption so far, and all the plants are running wherever we are supplying the manpower. As such, there is no issue as of now. All are running, sir.
Okay. And because of commodity, I mean, commodity prices have been quite volatile, right? So
yeah, quite volatile, and it have impact on the domestic business than international, because international we are supplying only O&M manpower. In construction is there only in domestic. There is increase in the price of material, and contract execution expenses have increased. To the extent we have a PVC factor is already factored in the agreement, so we'll get the reimbursement from the client on the escalated values. Okay.
So we are able to pass on the cost increase, right, to the client. Hello?
Yes, sir.
Okay. That's very helpful, sir. I mean, that's it from my side. All the very best. Thank you.
Thank you. Next question comes from the line of Vinay Kumar, an individual investor. Please go ahead.
Hello, good morning. Am I audible, sir?
Yes, sir.
My question was, there is a government going for the coal gasification. So do we have a scope there? Because BHEL and Adani Group is also there in coal gasification. So do we see business opportunity, and what type of, what will the amount, sir?
You say the recent information, we are also tracking it. Government has planned an initial investment of 37,500 crores. Because looking at the import dependency of the fossil fuels, particularly the petrol, LNG and other things, coal gasification is not attractive. Of course, the pilot projects have been launched with a group of companies like BHEL as the technology provider, and then along with the Coal India and all those things. Then of course, this is very much in the initial stages, and the investment size what we are looking at 37,500 government has planned. I think that should happen. And the only thing we are also trying to start tracking these investments, and first we have to look for the technology partners, because as a similar job what we can take it up. But as a developer and owner, that can be a second option. First option is to enter the work in terms of traditional work, what we can do in installation, service business, and then undertaking the complete plant construction, and that should be a possibility with our qualification. And this is already in our thinking, but let the investment, it should take some time. First of all, it is a thinking and allocation. Then there should be developers and owners and plant developers who has to invest it, and then the engineering aspect has to be pumped up and the investment has to flow up, and then perhaps it will happen. Maybe we will expect maybe down the line 6 months or 1 year it can start.
Hello.
Hello.
Yes, Mr. Patil, please go ahead.
Yeah.
I think his line got disconnected.
Mr. Patil,
No, you got it?
there's no reply from the line of Mr. Patil. We'll move to the next participant.
Yeah.
That is from the line of Riya Mehta with Equitas Investments. Please go ahead.
Thank you for giving me the opportunity. So my first question is in terms of the demand from private capex. So we're seeing demand from thermal capex. Apart from thermal, where are we seeing major demand from which sectors?
No, yes, madam, I agree. I told you, mining side, a lot of investments are coming, particularly from Coal India. Of course, on the mine side, we have taken up all the 2 jobs, which is on the progress. But another development I brought out was on the NMDC investment of 70,000 crores for their mining capacity expansion by 50 million tons for all their mines in Ballari and then in Chhattisgarh. Therefore, there, a present an opportunity of 10,000 crores has come. We are trying to work with Tyson Group to jointly bid with in those tenders, and that is a major thing. And then there can be other opportunities in the case of steel also. I told you, the steel sector, the total capital investment planned in the next 5-6 years is about 10 lakh crores. Of course, there are big projects. JSW is planning, then ArcelorMittal is planning, Steel Authority is planning it. We have started initial bidding, but at that, in the case of ISCO Burnpur, we are not successful there. But we keep our efforts there in the future opportunities can come up. ArcelorMittal is going to put up the plant in near Vizag. JSW, we are in touch with them because we have done the work for them in Dolvi and Ballari for their expansion coming up in Orissa. Therefore, these are the areas we can certainly look at it.
Apart from what Ramesh has said, another area is the railways, where we are looking at the new broad gauge lines works and the even the construction of new lines we are looking at, and road projects are also there. But of course, there is unhealthy competition is there in road side. But if any good opportunity is there, road side also we'll look at it.
But the new thing, what I would like to say, what we got the breakthrough in the metro O&M, we have taken the job 279 crores in Bombay. That is a beginning, and I already told you about that. It can be a huge opportunity which can be there for all for the changeover from the present system operation maintenance to outsourcing by the metro companies.
Got it. Also, in terms of client concentration, how much would BHEL and Adani form for our total order book?
No. As I told you, Adani, we are doing 6,400 megawatts. The total order about 3,200 crores. And then BHEL, we are doing about 7,000 megawatts on thermal and 1,400 megawatts in nuclear. That comes to, and then BOP project that comes to 4,700 crores.
Got it. Are we facing any working capital issues considering cost prices increase? Do we have escalation clauses in place for these orders?
Yes, ma'am. All the clauses, we are having PVC clauses which we are claiming in every bill. based on the indices we are claiming. So, and advances are also they are giving mobilization advances. So there is no much of working capital issues in terms of handling all these running this project.
Okay. And in terms of the water project issue which you were mentioning, just wanted to know how much what is the order size for that contract?
Balance is around 900 crore of order we have to execute, ma'am. So last 1 year we stopped doing the work and only we are concentrating on the nearer to completion projects where we completed 75-80%. That project only we completed and we brought these major projects into the O&M phase. So for O&M we are getting monthly fixed revenue as per the state government funding. They are releasing that fund and the O&M revenue. Almost 500 schemes which we are targeting by June, we have to bring everything into the O&M. Out of that, so far we did around 300 plus of schemes we moved to the O&M. And based on the central government allocation of fund, then probably we'll restart this balance work of 900 crore. So the movement last year also the state government level, side they have released the fund. We have realized almost 231 crore during the last FY26, and further we need to get the certification for 128 crore of work in progress and another 90 crore of receivable we have to realize from the client.
So could you help me with the total amount which for the work we have done and the amount not received yet?
Not received is 90 crore, ma'am, against the 2,700 crore of order value. 1,800 crore worth of work we have executed. We have received entire money except the 90 crore of receivable and 128 bills are yet to settle. Work done and spending for certification. So around 200 crore. Out of that 200 crore is the overall pending in the balance sheet.
Got it. And this is included in our order book numbers?
Yeah, it is there in the overall closing order value. 55,000 is included 900 crore value.
Okay, so we can remove 900 crores.
900 on that, 200 is already WIP is there. The remaining 700 is the we have to execute.
Oh, got it. Now, are we taking any further water projects or something?
As of now, we are not showing interest on because the power orders we are getting more power orders. We are concentrating more on the power and O&M business. Till 2030, this is the major requirement. So we are concentrating more on this. Because across the power water division, Jal Jeevan Mission schemes are stuck because of central government holding funds. So we are concentrating on the regular business.
Got it. In terms of railway, I think last couple of years there has been incrementally very high competition and margins were compromised. So what part of railway are we excited about?
We are actually not doing the regular civil kind of works. No? We are taking the combination of overhead electrification with the signaling telecommunication and civil together as a package. So that the competition is very less with this kind of, because the technical eligibility may not be there for the regular civil kind of people. We are targeting only those mix of both civil and technical qualification requirement projects only we are targeting.
And how much is this in our order book, railway? And how much have we done?
700 crore is there.
700 crores. Just for a broader guidance perspective, since we saw 7,200 crores of order inflow this year, are we on place to see 10,000 crores for the next year? And the West Bengal order which we did not get, is it a retender or somebody else received?
Yes, they will again recalling the tender, ma'am.
Okay.
So this year we may look at that orders. Yes. And moreover, some of the projects for L1 in one Bangalore Metro, we received L1 and Monorail also we received L1 in March. But results L1 we received in April. We were L1 in March, but LOI received in the month of April. So our guidance is like 10,000, almost we nearer to like 10,000, but unfortunately because of this cancellation, shortfall happened.
So we are on track to have 10,000 odd crores of order intake for this year.
Yes.
And the current order book which we have excluding MDO, what would be the average tenure of the order intake?
All our orders 2 to 3 years, between 2.5 years, you can take average order execution time. For every year, we are doing 40% execution and opening order value. So the 2.5 years, you can assume the average order size.
Right. Also for now on the MDO side, when is the coal washery getting commissioned?
We are almost all materials already reached the site and erection works are already started. By December, we'll be ready with our washery, ma'am. We'll do the testing and we'll be ready with our washery. And from Q4 onwards, we'll do the washer coal. We'll supply washer to the same.
Just to revisit this for FY27, you said 450 odd crore, 300 plus 150, and next FY28 would be 500 plus 750 crores, right?
No, 350 plus 150, 500 crore for FY27. KBP mine 50 and sale 150 crore.
Could you repeat your voice is getting faster?
Yeah, the KBP mine we will do 350 crore and the sale mine we will do 150 crore this year, FY27.
Okay, got it. So total 450, right?
500, ma'am.
Right. Thank you so much.
Thank you. Next question comes from the line of Mahesh Patil with ICICI Securities. Please go ahead.
Yeah, hi sir. So first question is that you have highlighted some labor code provision in Q4 that has impacted the margin. Can you give details about the exact amount?
Around 4.5 crore we created a provision for the increase in that 40. Earlier we followed the 40% basic, now it's increased to the 50% level. So there is incremental gratuity increase, so that we created a provision for the entire year impact.
Okay, sir. And sir, on the nuclear side, we have already received one project. Are we seeing any further opportunities there? How are the discussions going with some of the clients?
Yeah, I think we have already taken in Kaiga to 560 crore civil work that is in progress, that is 2 into 700 megawatts. But as we know, policy making by government is bullish on the nuclear side. We have got 8,800 megawatt of installation. Their plan is to make it 100 gigawatts, 1 lakh megawatts. And that is a very tall task, but it needs a lot of supply chain management, engineering and technology, and then operation details. And we are looking at it, and now the small modular reactors, SMRs, coming at 200 megawatts, 250 megawatts, that is to be there. Then we have seen recently the American team is there in India to discuss their association with the nuclear supply chain. We will watch that because there are two, in the nuclear side there are two aspects briefly. One is the offsite facilities, another is the reactor side facilities. The reactor side facilities is very different in terms of quality. But offsite facilities are similar, like what we do in a power plant, like turbine package, turbine island, and then cooling water system and auxiliary for piping. But we will watch carefully and see, because nuclear power installation has got its own issues in terms of challenges, and that we have to slowly master it, and ultimately we have to enter there.
Okay, thank you.
Thank you. Next question comes from the line of Nikhil Kanodia with Sunidhi Securities. Please go ahead.
Yeah, hi, good morning. Am I audible?
Yes, sir.
Yeah, sir. Firstly, congratulations on the decent set of numbers. So, sir, my question revolves around the like what we have seen is a lot of infra capabilities have been kind of vanished from the due to the war. So, are we seeing any erection or maybe ETC or EPC kind of a opportunity in that sense, and what could be your the opportunity size from that market?
Middle East. Huh? Middle East opportunity. Yeah, Middle East, as we explained, about 300 crores ongoing jobs, mainly in the maintenance, manpower supply, and then some jobs we are doing in West Africa, that is there. At present, our focus is on providing fully manpower supplies for the operation maintenance and then shutdown jobs, etc. Now, as far as the installation jobs and then major jobs in construction, that we have got a strong reference there in the international combined cycle gas-based plants, about nearly 7,000 megawatts. And that will be there, but let us wait for the war to end, and then the next investment should come up, and there can be a lot of opportunities there. And we are there already. We have got an organization set up in Dubai and then in West Africa, and we will be there to see how to take it.
Okay, sir. So the second question is that you mentioned that the market size for your power business is around 60 to 70,000 crore. So in that sense, how much are we trying to bid over there, and what is our bid-win ratio over there?
No, we have to see what is the hit ratio there. When the competition is there, we have to see the factors like competition and then the customers' interest in the contractors. Like Adani, they will prefer it. It is a different matter. JSW, perhaps they can have a choice being a private sector, but all the government jobs, we have to see how the competition will be there. Therefore, the general size is that our previous record is we have been bidding 40 to 50,000 crores of opportunities for getting. Therefore, the hit ratio can be somewhere about 15%. That is what it is. That's why this year, because of the new opportunities and new areas of the business, and then mining side, metal side, and then power sector, more investments coming up, and also in some of the infrastructure side, the ongoing jobs in railways and roads, we have kept a target of 12,000 crores. With that, now we have kept the opportunities identified about 70,000 crores.
Okay. So, sir, if I have heard it correct, you said that 70,000 crore is the opportunity size for which you will bid for around 40,000-50,000 crores, and the hit ratio could be around 15%, right?
Yeah, that should be there, correct.
Okay. So, the third part is on the labor. So, like what we have seen is that the kind of labor availability is kind of a challenge right now. So, what are we seeing? What is the ground reality when it comes to labor? What is the kind of a price increase that has been there in the labor cost? And when do we see the availability of labor coming back to on the fields?
No, ultimately, I think the developments in West Bengal. That's where a lot of labor comes, particularly the civil labor. Hello.
Hello. Yes, sir.
Yeah, the civil part of the labor mostly comes from West Bengal, Orissa, and then some considerable labor is there from Jharkhand and Uttar Pradesh also. Therefore, as on today, if you look at it, our total headcount has gone up more than 40,000. It has more than 70-75% is on the labor side, and then O&M, in that O&M is about 18,000. In the case of O&M, we don't have any problem because they're all skill-based and then semi-skill based, and there is a secured job for 5 years, 3 years like that, and the people are trained for that, and once they are there in that, we continue to employ them, and then when the jobs get renewed, it will be continued and all. The challenge will be in the construction side and the civil side, and then installation side. That way, so far we have been managing it, and that is how we are able to meet our physical targets also. And the new jobs, what we are coming, certainly some more increase are required. And what we can say based on the record of Power Mech, we have reasonably jacked up the manpower requirements, meeting the schedules and contractual requirements. And so far we have not made any, there was no major shortfall of labor in executing the jobs.
Okay. Okay, sir. So one last question that you mentioned for the order inflow target for FY27 is around 12,000 odd crores. For FY28, what will the target look like?
Maybe in the same range, the 12,000 to 15,000 range, but it depends on the opportunities available.
40-60.
Okay, sir. Okay, sir. Those were my questions. Thanks for answering those, and all the best for your futures. Thank you.
Thank you. Next question comes from the line of Ravi with Sundaram Family Investments. Please go ahead.
Hello, good morning, sir. Am I audible?
Yes.
Okay. Thank you for the opportunity. Congrats on the excellent set of numbers and the good guidance in the order book. I just wanted to reconfirm one understanding. I think in one of the comments you said we are expecting 21%. Is that number for revenue growth or is that for order book growth?
It's the revenue growth, sir, 21%.
Okay. Thank you, sir. That was the only clarification. All the very best.
Thank you. Next question comes from the line of Vinay Nandakarni with Hathway Investments Private Limited. Please go ahead.
Yeah, just wanted to, somewhere you had said that your growth in MDO operation, there would be a 7% jump in FY27 and a 13% jump in FY28 after the washery is put up. This is only for the numbers that you gave, you have done 106 crores in FY26 and you're projecting 150 crores. That's almost a 50% jump.
The jump is in the percentage of revenue. I'm saying percentage of revenue, sir. The 7% of the total revenue.
Oh, okay.
So 7% and another 12% on the revenue component.
Okay. Secondly, in terms of growth, you had said around 21% growth would be for the coming year.
Yeah.
And in EBITDA, you had mentioned around 12.5%. 12.5%.
Yeah. And 0.2 to 0.3% jump will be there.
Okay. And if I just, can you share the EBITDA numbers? Because you have given the mining EBITDA numbers to be around 15 to 16%. Yes. For your mechanical and civil, what would be your general EBITDA margins and O&M?
In always O&M is around 15 to 16% and the remaining construction will always be less than 10%.
Okay.
So blended together as of now, with other income, we are announcing at 12.3%. Now the other income, because earlier I have a QAP unutilized funds are there, I have major interest income. Now that consumption already happened. So now going forward, we will generate around 12.5 for the coming year. And every year it may jump another 0.5% till we reach the PRC, which is in 2030 will touch 14%. 31 will touch around 14.25.
Okay. Just last question. This is, you had said for civil it is less than 10%. For mechanical also it will be around the same?
Yeah. All erection, civil, everything you can take less than 8 to 10% level of margins.
Okay. And just one small bookkeeping question, which till last presentation you had mentioned electricals as one of the business segments.
Yes.
This time you are mentioning EPC. Yes. Is it the same or is it different?
No, it is a different business because actually earlier the transmission division actually used to do the transmission erection of the lines and other things. That business is over now. So in between we have taken a railway work and the team is doing that railway activity. So we shifted that entire portfolio to the civil business and we added a new line of activity of EPC business.
Okay, so the electrical part is now covered in the civil work.
Infra, yeah.
Okay, thank you very much, sir. All the best for the next season.
Thank you.
Thank you. Next question comes from the line of Rohan Advant with Pride Capital. Please go ahead.
Yeah, thank you for the opportunity. Sir, my first question is that in Q4 of FY26, our MDO revenues were 226 crores. Is that right?
Right.
Sir, so for the full year FY27, we are guiding 500 crores when in this quarter we've done 226. So is there a lot of seasonality through the year? That's why that Q4 is so heavy?
No, actually the KBP mine, as per the contractual capacity, the 0.4 million is the first year of operation we have to supply. But the client accepted because there is a delay of project, so they have taken higher capacity. So 1.6 million we supplied. We did in November only we started the production and December, January, up to February we did around 40 crore of revenue. And March month we scaled up the operation and we did around 117 as exceptional. But year on year we comfortably we can do 40 to 50 crore of revenue going forward. So but in between rainy season will be there. So as a factoring all these condition and in the current year I have to do around 1.5 million tons as per the contractual capacity. Again, client constraints also will be there for selling this material up to the outside market. So we are conservatively factoring this at a 350 level.
Okay. So while you started late in the year, a lot of it was compensated in the month of March, which was higher volumes, but that's not the sustainable monthly run rate. And so full year it will be lower, right?
Actually, this is our entire land belongs to the forest department, and the forest clearances, and there were delays in the forest clearances. Then after that, we have to do the tree cutting and a lot of pre-operative activities we have to do to bring this into the production. So OB removal started in April, and in between the rainy season started, and then we started production post rainy season, and November we started the production.
Got it. And sir, in the last call, which was in Feb 26, we said that by FY28 we can touch 1,800-1,900 crores in the MDO space, but now we are saying it's 1,250 crores. So where's the gap now, sir?
No, the KVP mine, their washery is not ready from the CCL side, but even though it is not in our scope, but as per the contractual terms, our intention was to push the client to take the major material. So the next year is 1.5, this year 1.5, next year is 3 million. But our intention was to push the client to take the major higher side, higher offtake. We are pushing him. If that happens, we can do the major business. But conservatively for the people, I am giving at 350 level. And then the sale project, we projected 28 will reach the PRC, but again, ramping up of the production from 0 to again 4 million ton in a single year is again a tough challenge. So conservatively we projected 750, and FY29 we are projecting the full capacity in the sale project. Because
okay, and at full capacity it will be?
4 million tons in the sale, and 5 million is in the KBP. So the KBP will touch full capacity by 30. And full capacity 29 by the sale, because the lot of washery is just usually constructed, and there will be the first year of operation we have to see the conditions of this washery and everything. Then conservatively we can because of all these factoring reasons, all these reasons we are factoring this at a conservative little value, but we can exceed that number.
Okay. And sir, in revenue terms, how will it be? 4 million and 5 million. How much does that translate in revenue crores in 29 and 2030?
Around 2,100 to 2,200 depends on the escalation value, sir.
Got it. Yeah. Okay, sir. Thank you and all the best.
Yeah. Thank you.
Thank you. Ladies and gentlemen, due to time constraints, we have reached the end of question and answer session. I now hand the conference over to Mr. S.K. Ramaiah for closing comments.
Thanks for your participation and very interesting questions. And of course, we continue to be bullish on our business opportunities. The power sector investment is growing maybe another 2-3 years, and maybe 5 years we've got a clear outlook of the growth in the power sector. And then O&M is a business in which we'll sustain the profitability and then growth also. And then we are tracking a lot of new investment, new plants coming up for O&M and advanced stages of working in closing in some of the contracts there. Therefore, O&M is a positive thing because of the annual commissioning can go up to 6 to 8,000 megawatts on the minimum side, and that should throw up a lot of opportunities. Then power sector, they said overall opportunity size about 60,000 crores, and considerable orders have been taken on that side by BHEL and then Adani particularly, and then JSW is coming up. Then new investments which will come in power sector, will continue to track it. Then in the non-power sector, I said mining side facilities, we are taking an interest, and we have done the bid for one BOT type of projects, but the outcome is not known even though we are positioned because of the pricing issues. And then the EPC type of jobs are also coming up, about 3 tenders, about 10,000 crores in NMDC, and then steel plants, non-power sector. And then O&M on the metro side, we have discussed that we have made a beginning in Bombay Light Metro, and that should open up a lot more opportunities for increasing the O&M profile of the company. And then in the export side, we look for how the opportunity takes up and particularly the situation improves in terms of the Middle East war. And then in the West Africa, we are trying to look at new territories in terms of Liberia, Senegal, apart from Nigeria. And we are having some discussions in the Africa side also for the new investments coming in many of the countries. But overall, I can say power sector will continue to drive the business with order backlog of 70%, and that will be there in the next couple of years. But our interest is to diversify more and more into similar jobs in steel sector, mining sector, and then preferably in other sectors which will come up, oil and gas, etc. Let us see. And that is how we have kept a target of 12,000 crores this year, and that should be reasonably possible with an opportunity size of nearly 70,000 crores for the current year. Thank you very much.
Thank you. On behalf of Ashika Institutional Equities, that concludes this conference. Thank you for joining us. You may now disconnect your line.